This is a time to be a disciplined investor. That means if you've seen a lot of gains, maybe take some off the table. Yesterday we saw the aggressive sell-off, and even early this morning it looked like it was going to continue, but it didn't continue. The rally flipped, and we ended up with a very positive day. The same trend did continue, the rotation trend we've talked about into the defense seems to be, picking up steam here. There's a massive bubble between megacap tech and value, so I think that should happen, and those, valuations should start to be identified the same way, because we give tech a lot of credit for being high growth, but at the end of the day, it's about the cash flow, and it's about the cash flow. So we need to have reasonable earnings multiples versus Amazon, which I think is starting to get a little too pricey. And, I could be wrong. Maybe they'll generate massive revenue streams. I have a very interesting case on Tesla I'll talk about in a second. I can compare it. But Amazon has gotten to a point where they scooped up a bunch of their customers that they didn't have, like old people and people who are now doing online grocery through Amazon. And it's like, now what? They sell everything. They sell to everyone they're going to sell. And I feel like there's only more competition that's coming about. Walmart Plus, they're essentially bringing the store to the laptop, and Walmart Plus can bring the store to the laptop just as well. And then they've got, 10% of the country, or, 90% of the country lives within 10 miles of a Walmart. So maybe the Amazon multiple is a little too expensive and the Walmart multiple is a little cheap. I think Walmart might have more growth potential. Regardless, Tesla. This is what people want to talk about. There's a possibility, if Tesla is going down a path I think they might be going down, that they could be bigger than Apple. And that's if they don't make cars anymore and they make batteries and solar and that kind of stuff. Elon Musk said last Friday that the next earnings conference was going to be in person and it was going to be called Battery Day. So, what their advantage is, cars are very competitive. I just looked at the Ford Bronco. It's fucking sick. It's like sicker than other Teslas. So, very competitive. But what Tesla can do better than anybody else is they can produce batteries for the best batteries for what I assume are reasonable prices that are only going to improve. And they've already got so much AI, self-driving AI that's so good that, and maybe instead of making cars, they should just sell the batteries and the AI to all the other car companies. So if they go down that route, they've got a massive high-ticket product that they're just selling to people who sell other high-ticket products. But, so could be a lot of revenue there, and then they can do things like go into houses and do stuff that is in that realm. So, it's an expensive stock. Even with that possibility that it might be bigger than Apple, I would not buy it here. We just need to let it mature into the valuation. The overall point I'm trying to make here is a lot of future and a lot of growth and a lot of potential and future valuation is being pulled in just aggressively because there's people are acknowledging problems with the economy, and they're looking to things that are going to be good, like CRISPR technology and the future, and they're just buying it because the economy is stagnating. So they're just buying this potential stuff. But as we saw in 2000, 2001, the same exact thing. A lot of those companies are still around. Oracle's still around. Amazon's still around. But in the next several years, it took several years. Even look at the Nasdaq. It took Nasdaq 10 years, 15 years maybe, to get to the valuation it was when it was at the peaks of 2000 and 2001. So we really have to consider this valuation question when buying these stocks. So JP Morgan earnings, seems like they're not really a bank. I mean, I don't know what they're doing with like the commercial side and all that. Made a lot of money on trading. So it seems like, they're doing good things with their money. But their economic outlook was just no economic outlook. Like, nobody has an economic outlook. Like, it's murky now, is a word I've heard a lot. So, yeah, I think that's pretty right. Just murky, because California, I heard something today that consumer spending has decreased in states that are seeing massive rises in cases, so like California, Texas, Florida, but not to the bottom, not to like where it was in March, April, the lowest point. I think the same thing is going to be true with the stock market. I don't know what's going to happen in the stock market, but I think valuations are a little high. That said, I thought valuations at the bottom were a little low. So I would like to see us get somewhere in the middle and see what happens. So we'll see what happens. Disciplined investing. Take some of these gains. If you've got a stock that's rallied significantly and you've got a good outlook for it, consider the valuation question. Is this valuation getting a little too high? Maybe it is. If it is, you don't need to sell the whole thing. If you like it in the long term, no need. But take off 20 to 50%. Realize these gains. Maybe the stock sells off. Maybe you can buy some more back. So we'll see what happens. But something to think about. So until next time, peace.